Which accounting method should I use for my construction business?
When you do construction, there's just the timing makes everything so skewed on your financials. And construction companies need to do, and this is highly important, is they have to determine they want to choose the type of accounting method they want to use to track their income and expenses. You can do percentage of completion or completed contract method.
The completed contract method simply means that your income and expenses are only recognized once the project is completed. In an actual scenario, the company may have already earned money, but in the eyes of the accountant or the IRS, you haven't technically earned from that project until you file for the tax return. On the other hand, the percentage of completion method means that your income and expenses are proportioned to the portion you complete in a project. When you complete 50% of a project, that's the only time you can declare the 50% of your income or revenue in a project. The completed contract method stands out for its simplicity and straightforward approach, favored by many bookkeepers or CPAs. It ensures a clear depiction of profitability by aligning all project-related expenses with revenue upon project completion. The method simplifies financial and risk management by deferring revenue recognition until the project is finished. Choosing the completed project method is advantageous. It records income only when a project is truly finished, preventing issues if a client cancels and taxes are already paid, since the IRS doesn't refund. Picking the right accounting method is crucial to avoid such problems. In addition, you can monitor financial fluctuations better in a completed contract method. You just need a skilled accountant and bookkeeper for accurate documentation, especially when seeking loans. Many contractors face challenges in finding a qualified professional who diligently tracks these crucial details. Since you can't declare your income until the project is completed, the completed contract method may delay income recognition. Your income or revenue may be affected, posing an issue with tax fluctuation. Due to varying tax laws each year, this could be a drawback in choosing the completed contract method. The completed contract method may not be an ideal choice for large projects, potentially displaying inaccurate financial performance for extensive projects spanning multiple years. For percentage of completion, on the other hand, it allows you to easily track your income or revenue for every portion you complete in the project. This enhances transparency in the project and provides a clear picture of profitability over time. The percentage of completion provides a better reflection of project dynamics, offering insight into ongoing project financials, aiding in real-time decision-making and financial management. Although the percentage of completion has its advantages, the downside revolves around complexity in implementation, involving a more intricate process of estimating completion percentages, potentially requiring more sophisticated accounting systems. It may also result in income overstatement if initial projections are optimistic and fail to align with the actual project completion. The percentage of completion can also be vulnerable to adjustments if initial completion estimates are inaccurate, potentially leading to revisions in financial statements.
It kind of depends on the owner. They can do whatever they want. I prefer completed contract method. That's what I use for one of our clients. I just think the completed contract is more accurate than the percentage of completion, because you can say that, okay, I've taken in a 40% deposit. You have to be careful what deposits you take in, because you're only allowed to take in a certain percentage of upfront deposit, and then you have to complete a certain amount of work before you can say that that percent is complete, and then you can recognize that revenue on your books. So I don't like that method as well as I do. We're not showing any income on the books until that project is complete. And when all of those costs are in, now you really see what your net income is. So when you move it over to your financials, it all sits on the balance sheet. So it's a liability to your company. And it is a liability. If you've
Uh-huh.
taken money from a customer, let's say I come to you and you give me that 40% deposit, you know what? I haven't earned that yet until I complete that job for you. You're satisfied. And then I can earn all of the money you've given me. I may progress invoice you, 40%, and then after the racks come in and we start the install, then, I may progress invoice you another 30% or whatever. But at no point, that's a liability, because you could come back and say, I'm not happy with any of this. I want my money back. That is a liability. And that's another reason I like completed contract. That is a liability for the company up until the point that that customer is happy and they have fully paid you.
It is essential to note that when choosing the right construction accounting method, you should consult your accountant on what method to use. It will always depend on the construction project and the prerogative of the bookkeeper and/or accountant. In general construction projects, our construction accounting specialist highly recommends the completed contract method. Although many accountants and bookkeepers may be reluctant to adopt it because it may seem like more work, it proves more accurate by treating money as a liability until fully earned. Are you a construction business navigating the complexities of accounting methods? Explore sound financial strategies for your construction business with Columbus Bookkeeping and Accounting Services. We'll guide you through accounting methods tailored to your projects. Contact us for a consultation and build a robust financial foundation today.